Hey, Eric here from 5minuteinvesting.com. And right now I'm in Guangzhou for a business trip. Uh, I'm training some people on data analytics, and I just want to record this video to talk to you about patience when you're investing. Now, a lot of people struggle with patience. They think they should be more patient when they're investing, hold on to the stocks longer because it will be more profitable. Now, most people are not patient and they exit too early, so they're not able to capture the full potential of the stock. Now, why is that? Most of the time, we set the wrong expectation for ourselves. Now, imagine you are cooking a meal and you're making a steak. And in terms of marinating, in terms of putting salt and pepper and then cooking it, takes around half an hour. Now, I tell you, well, you need to make this steak within 15 minutes. And of course, this steak is going to take 30 minutes to make. So at the end of the time limit, which is 15 minutes, you're going to be very anxious. You're going to be very impatient because you think the steak can be made in 15 minutes when in fact it needs 30 minutes. Now, this seems like a very random example, but there is a very important lesson to be learned here. If I tell you something is supposed to happen within a certain time limit, but it doesn't, and it takes twice the amount of time, from 15 minutes to 30 minutes, that it's going to make you very anxious. You're going to be nervous, you can't sleep, and you're going to think about the investment all the time. And this is true for investing, and same for cooking. And that's why when you're investing, you should do the opposite. If you think, okay, I'm going to invest in this company for 2 years and I think the price will go up by 20%, I'm going to give myself double the time. If I think this will happen in 3 months, I give myself 6 months. If I think this will happen in 2 years, I give myself 5 years. So by setting my own expectation to be double of what my original estimate is, I'm more conservative. And I let the market beat my expectation. So it will be a pleasant surprise. So instead of, I thought the market would have gone up by now, I was like, okay, I'm going to hold this stock for 5 years. And I think it will go up by 30-40%. Now, suddenly, after 6 months, it went up by 40-60% already. And that already reached my target. And the market usually is crazier than my expectation and will go up much more. So I'll just exit after it hit my target. And that's the key distinction, is that my expectation. So right now we talked about the first kind of patience, which is I expect something to be happening a lot sooner than my original plan. And this gives me patience. The second is skill and experience, and that gives me patience. For example, when you're using technical analysis to invest, a lot of people think technical analysis is the holy grail, and technical analysis will be able to predict the exact low or the exact high. But if you have used technical analysis, you know that is not true. And at that point, you have two options. Either think A, well, you're not smart enough, that's why you didn't find the answer yet. So technically, you can improve yourself and improve your timing. Or you're going to accept the fact that technical analysis is not perfect, and you're just going to approximate. As long as you can get it 80% right, you are pretty good. Now, at first, I try to get it right. And I tried really hard to get technical analysis right, try to get the perfect timing, and I think I'm losing money because my timing wasn't perfect. But the truth is, when I use a simulation to train my skill as a professional investor, I realized no matter what I do, technical analysis is not perfect. And that's when it clicked for me, is that you will never get perfect technical analysis. And you'll never get the exact low points that you're supposed to enter to make the greatest amount of profit. And when I give up that goal, when I give up the belief that technical analysis is perfect and I just use it as a tool to help me invest better, my results exponentially improved. And this gives me patience because I know when I invest in something, I know the market wouldn't immediately turn up. The market wouldn't immediately go up after I invest because it's not supposed to. And let me give you an example. So let's say you're trying to invest in a company and the company is performing poorly, but you know that this is only temporary and then eventually the price will go back up. Now, because the company is performing poorly in the short term, the price is low and you can buy, right? And you buy it at a discount. Now, should you expect the price to immediately go up after this? No. Because if you are buying at a discount and you are ahead of other people, why would the price immediately go up and be in your favor? It would take some time, right? And because technical analysis is not perfect, you don't need to be too anxious if you go in and the price doesn't immediately move in your favor. Because you're early and it's okay. And it's okay to let it sit for a while because you're waiting for other people to notice that the problem is only temporary. And this is the key to investing. And this is the key to give me patience to wait over the long term. And that's why I don't do day trading. I don't do swing trading. I don't do any short term. I don't even use the daily chart. The only chart I use is the weekly chart. And most people, I can confidently say, 80% of the people will use daily charts or below because they want to extract profit faster. They want to basically put cash into their bank faster without waiting for the market to grow. There's a very famous quote about investing from a Nobel Prize winner. I forgot his name, but it goes like this. Investing should be like watching paint dry or watching grass grow. Once you enter, you're just kind of waiting, sitting there and letting the market work for you. Thank you for watching till the end of the video. And I'm very excited for you because you're passionate about investing and you want to change your financial future. And I really appreciate your support. So now the biggest question for you is, how do these strategies, tips, and tricks fit into the entire investing approach? Because you're learning one of the 62 steps I teach on 5minuteinvesting.com. And when you apply all these strategies correctly together, your return, it's going to be tremendous. And since 2016, my return to date is 204%. So, how do these strategies fit into the bigger picture for you?